watch you stare.
What's up everybody, it's Benson right here. I'm super excited to bring you today's video. In today's video, I want to show you how to day trade during the end of the year. During the end of the year, the markets are not always similar to the mid-year and the beginning of the year. The end of the year, people are going to vacations. There are also a lot of factors that will probably make you not to make too much profit. Like it could go in your favor, like bullish market, and then before you know, the bullish candle is all retracing. This and many more might have already been happening to you that are watching me right now. So if that's true in your trading, please kindly do me a favor and smash the like button and also subscribe if you are not already. You are welcome to the family. So in this video, I'm going to be showing how I've been managing to day trade during the close of the end of the year, even despite this hard time, how market is flashing and dropping anyhow. So I just want to walk you through that process too. Thanks to the sponsor of today's video, which is FBS. FBS is a regulated broker which millions across the globe uses. FBS offer 100% deposit bonus to the client, and FBS also have fixed deposit rate if you select that functionality, whatever country you might be using it from. More detail included in the description box. Read it up and sign up with FBS right now and join me and millions of other traders who are currently using FBS to trade in the Forex market and even a lot more. Thank you guys. I really appreciate you guys for doing that. Alright, let's get straight to the computer. Here on my computer screen, you can really see I have a lot of markups, and I've had setups that didn't really work out for the past few weeks. Like this one we've got here, I was anticipating price to get here before it dropped. Nothing really like that really happened. And this one also happened. Queued out my break even right, queued my stop losses before it started moving right down here. So I'm just going to show you some few examples where it also happened to me. This was a success. I caught this trade from up on this point to this point. It was a success. That was but I exited at a very bad price. I exited maybe somewhere close to this point. So whereas I was anticipating price to keep continuing going to the upside, that didn't happen. All right, that's still because of the end of the year. So I'm just trying to show you, identify the problem. You probably might as well be seeing the same thing on your end. You probably be thinking, oh no, I'm doing it the wrong way and stuff like that. And this just happened yesterday. And it was like, no, it was really choking. I was really getting tired, dealing with my psychology and all of that. So if you are also in this problem, I figured it out. Here's the solution to that. So yesterday, I had an opportunity right here to go long, and which I told my team to also go long. They all went long alongside. Some took out their profit upon this bullish spike. So with this bullish spike, normally one would have thought that yes, the buyers are already in the market. But no, what happened? We had this melt, so this was thought to be like a slight retracement in order for us to start pushing back up, but that didn't really happen. After pushing down, the next one came down, next one keep coming down. Like this keep happening. So trades that were already in profit, very good profit with this bullish spike right here, became retraced back to our threshold where we got in our entry threshold. All right, so in the long run, it keep moving here and there, and it killed out my break even, because as this stop loss was here initially, yeah, I kept moving. My break even was somewhere around here. So upon this spike to the downside, yeah, this candle spike, we got stopped out of this trade in negative. All right, so as if that wasn't enough, yeah, price came up on this morning, so I hopped on at this point. Right now again, I'm already back to nothing again, because this is my entry point. So price is almost retracing to my entry. So I'm only waiting a little while for it to push up, then I'm going to close all of that trade, because now I remember what the problem is and how I tackled this. So this have me to bring out my old journal where I trade my last year's end of the year, my previous end of the years, and start keeping tab on what was happening. So I found out that the trades and the number of pips that I'm catching in those times were just about 10 to 20 pips. So I bet you guys better be doing the same thing too. Do not wish to catch too much pip in this period. All right, just catch 20 pips, 25 pips, 30 pips in place where you're catching 50 pips, 100 pips before. So as a day trader, for me personally, before I was catching 50 pips, sometimes a very good day I catch 100 pips and 150 pips. All right, so that was like at the mid of 2020, 2021 and all of that. But right now it's more like a scalp. Day trading is more like a scalp right now, because the way markets are moving, if you want to hold more positions, so you have to be looking at a higher time frame, like on 4-hour time frame or on the 1-hour time frame and all of that stuff. But since we are a day trader and I only focus on just one pair, which is GBP/USD, the best approach right now is for me to start catching just 20, 25 pips, 30 pips or 35 pips as the case may be, based on the market structure, or I get an exit using week's rejection. So I want you guys to really focus on this. So this actually brings me to the exit strategy. So whenever you get into an opportunity, maybe your entry, whether you're using smart money concepts or you're using indicators or you're using pure price action, any one of them, just work with this principle. So number one thing you have to look out for wicks rejection. Whenever there are wicks rejection, just such as this one we can see right here, weak rejection here, weak rejection here, weak rejection here, just up out of the market. That's the best way to trade right now. Or whenever you see weak rejection here, you see some candle cord right here forming consecutive highs or at the same level, they are ranging all at the same level, yeah, hop out of the market. That's the new strategy that I found, and that's what I'm definitely going to be applying in my subsequent trades. And also whenever I also saw this, then with this principle right now, I would have actually hopped out at this point when price was forming these consecutive highs, the same levels at this point. All right, the same thing also applied here. One would have actually also hopped out when price was forming the same thing to at this point. So another thing I also want you to know, always wait for price to meet you at the point, your entry point. Do not just get in because you are seeing Jeffrey said, okay, at this point, whenever I see this thing, for those who are on buys, should exit. So hence, since they are exiting, let me short. No, it may not always work. So I'm only saying exit doesn't mean you should enter into a sell entry at another time. All right, I just hope you understand what I mean. Yeah, still wait for price to, for your conferences to be made. Like me, I need to see at least 3 to conferences before I hop on, which are, what I mean by conferences, these are things that I look out for that allow me to go short or to go long at a particular time, which are psychological level, which is these blue lines that you see right here, this blue line, round up numbers, 1.3400, 1.345, 1.355, stuff like that, 1.3500, all of that stuff. Trend line is all of this line you see, this diagonal line that is touching your first touch, second touch, third touch, and other touches that you can see right here. All right, so basically for me, GBP USD right now, where it's currently at, should start moving to the upside. Why? Because we have had enough ranging to the downside, and the patterns right here is showing it. So most of this rest of this week, we should be looking to long GBP USD. So that's just my opinion on GBP USD. So it might change, yeah, based on the bias and candlesticks, whatsoever the patterns it's presenting as times goes on. But this is how basically I trade end of the year. So by keeping a journal and revisiting my journal made me to remember that yes, there's definitely nothing wrong with my strategy, nothing wrong with me or my psychology. It's just me forgetting the time of the year that we are currently in. So this video is a reminder that we are currently drawing to the close of the year, guys. Make sure you take your trading seriously and your trading journaling very serious, and do not look, if you're a day trader, do not look to catch too much people as you were catching prior to this time. All right, acknowledge the fact that it's end of the year and people are going on vacation, the market is really getting erratic, people are going for other stuff. They're trying to diversify their money, moving their money because of the common flash crashes that happen to stock market or all this investing at the end of the year. So guys, be safe, keep your money, and remember that staying out of the market is also a strategy too. All right, staying out of the market, not trading, is a strategy, it's a winning strategy. All right, if you are doing it at the right time, at least not trading is better than losing your money and not learning anything. All right, so that's what I think in today's video. So until next one, guys, see you, and remember to keep the fire keeping. Bye for now.